What's up, YouTube? It's Dubdigital. Crypto news, macro trends. But today, I'm gonna take it easy because I think we have a couple things to talk about. Because crypto, it's been bleeding. I see people over here sleeping on the couch and drinking vodka for dinner. In crypto, it's good times and it's bad times. Take it from me. I've been in crypto since 2013, and I've seen people come and I've seen people go. And today, I want to touch a little bit on how you survive one of these crypto crashes, because I've been in more than one of them. The good thing is, crypto more or less is a very resilient asset. To tell you the truth, it's looked like it's about to die like, well, damn near 1,000,000 times. There's been times where I was sweating it. Tripping. Between the Silk Road crackdown to Mt. Gox blowing up, if one thing's for certain, cryptocurrencies and Bitcoin definitely isn't boring. You're in something called a volatile asset class. The ups are supreme, but the drops are depressing as hell. So let's go ahead and talk about some of the lessons learned I've had over the years getting through these difficult, challenging times. So item number one, you only really lose money when you sell. Portfolio gains are very different from realized gains. That's when you actually sell an asset to secure purchasing power from that price appreciation. Is that they believe that perception of increase in wealth was actually realized increase in wealth. So if you find yourself feeling down because your crypto portfolio collapsed about 50 to 60%, good news is this: there's people who've been in crypto for a while who've been there and done that, and even suffered harder losses than you've suffered right now. And that brings us to item number two, which is longevity in crypto is key. Crypto over the longer spans of time when analyzing the macro cycles goes from periods of overvaluation to undervaluation. Being able to capitalize on those swings in valuation is where all the opportunity is, but also where all the risk is. Over long enough spans of time, crypto tends to rise above and go beyond points that it has visited in the past. I bought my first Bitcoin at $100 and then it tanked down to death, and I freaked out, man. Not gonna sit here and act like I was cool as James Bond. But 1, 2, 3, and 4 years passed, even longer than that. And I never thought Bitcoin would be sitting up 5 figures. There's a common saying in investing, guys, and it goes like this: the trend is your friend. And looking at the overall macro structure of crypto, the trend has more or less been up. Now I know how it feels, especially if you put some money in a crypto and it dropped down and now it got cut in half. That freaking sucks. And that definitely is gonna make people feel a type of way. And anyone who says it doesn't faze them, I'll show you a liar. But now is a critical time to ask yourself, do you believe or do you not believe in crypto? Because what you should do next 100% revolves around how you answer that question. If you don't believe in crypto and you don't believe in this technology that's trying to revolutionize the monetary system as we know it today, then your belief in the asset does not outweigh the risk. But if you do believe in a decentralized monetary system, one made to maintain the purchasing power of its users, why would humanity not find that valuable at a point? And this is where the traders versus the investors start to get separated. And when you look around the world and you see countries getting their currencies inflated, you come to realize that adoption isn't a question of if, but when. The rest of the world really has not caught on to what you and I have come to understand. Because of that, these digital assets are going through a process called price discovery. What price can you put on financial freedom? The ability to spend your money wherever you want, at any time you want, without restriction or a governing central body. And the only challenge you really have is to outlast the periods of undervaluation, one of which I think we're in currently. Now, I don't think this is the macro bear market. I think this is a cool-off period for the greater expanse coming later this year. But the message is quite the same. In order to get where you've never gone before, you have to do things you've never done before. And you're gonna hear a lot of people saying, buy the dip. But what's more important than buying a dip is being able to outlast the dip. Because over a long enough time period, crypto has went up. And even with the crash of 50%, I still cannot believe the price that Bitcoin has hit just a short 7 years later. If you happen to be a crypto bull, and if you don't happen to have any money to deploy into drops like this, hodling is a great thing to do. But another thing you can actually participate in is finding opportunities to weaponize time. Finding things that throw off interest or throw off more crypto. BlockFi, Celsius, DeFi platforms, anything that gives you a reward over a set period of time. Because there's one thing that's super abundant during crypto corrections, and that's time. And a good investor maximizes their strengths and their resources, whatever they have abundant at the time. but also use that to your advantage. A good investor is a lot like water, able to move, be flexible, be malleable. And if you don't happen to have any of those, rely steadfast in your conviction. Understand why you got in this asset class. Remember why you entered this in the first place. Any good investment is built on a strong foundation. This is a time to ask yourself some really hard questions. But the good news is this: I've been going through these booms and busts for well a while now, and these patterns more or less seem to play out time and time again. And I'm still sitting here, and I ain't going nowhere. But hey, you ain't gotta listen to me. This is not financial advice. I'm just a dude on the internet. If you appreciate the content, give me a like, comment, subscribe. Dubdigital, crypto news, macro trends. I'll talk to y'all later. Peace.